Welcome to the overview of closing your Charles Schwab 401k account. Closing a Charles Schwab 401k involves three main options: rollover, withdrawal, or transfer. Your eligibility depends on factors like employment status and plan rules. Recent updates from the Secure 2.0 Act offer more withdrawal flexibility for specific events. This video explains each option and the steps involved to help you make an informed decision. A rollover is a tax-free way to move your 401k funds to another qualified retirement account, such as an IRA or a new employer's 401k. Choose between a direct rollover, custodian to custodian, to avoid taxes being withheld, or an indirect rollover where you receive a check but 20% is withheld. The rollover process involves choosing your new IRA account, opening it, proceeding with the transfer, and beginning investments. Schwab supports both direct and indirect rollovers. Rolling over preserves tax-deferred growth and avoids penalties. Option 2 is withdrawing from your 401k, which means cashing out the funds. This triggers immediate taxation on both pre-tax contributions and any earnings. All withdrawals are taxed as ordinary income at your current federal tax rate, which can reach up to 37%. State taxes may also apply, varying by location. For example, withdrawing $50,000 might result in $12,500 for federal taxes, $3,500 for state taxes, $5,000 penalty, leaving $29,000 in cash. This assumes a 25% federal rate, 7% state rate, and 10% penalty. A 10% penalty applies to early withdrawals if you're under age 59.5. However, exceptions exist, such as separating from service at age 55 or later in the same year. Exceptions include total disability, death, unreimbursed medical expenses, and qualified domestic relations orders. The Secure 2.0 Act added exceptions for birth or adoption. If you're age 73 or older, required minimum distributions begin. You must withdraw a portion of your account each year, taxed as ordinary income. RMDs ensure retirement savings are used over time. Failure to withdraw can result in a 25% penalty on the missed amount. Schwab provides online calculators to help estimate the tax impact of your withdrawal. Consult these tools and consider speaking with a financial advisor to avoid costly mistakes. Option 3 is transferring your 401k. A transfer moves your assets directly to another custodian, such as a different financial institution. Like a rollover, direct transfers are generally tax-free. Schwab allows transfers to competitors without restrictions. This is best if you want to consolidate your investments at a different firm. Always do this as a direct transfer to avoid taxation issues. Let's walk through the step-by-step process of closing your Charles Schwab 401k account. First, determine which option suits your needs. Roll over to an IRA to preserve tax-deferred growth, withdraw funds if you need cash immediately, or transfer to another provider for consolidation. Consider your employment status, tax situation, and financial goals. Rollovers are popular for long-term savings. Next, contact Schwab to initiate the process. You can call their dedicated line, use the secure online portal, or mail your request. You'll need to complete the official 401k distribution request form, providing account details, employer information, and the reason for closure. Processing typically takes 7 to 10 business days, with electronic transfers completing faster. Schwab doesn't charge any closure fees, though wire transfers may incur small costs. Digitalization is driving more online closures of 401k accounts. Charles Schwab reports 60% of 2025 rollovers initiated digitally, up from 45% in 2023. Thanks to app integrations and AI tools. Rollovers to IRAs rose 20% in 2024 to 2025 as investors seek lower fees and diverse investments, with Schwab's no-fee IRAs offering more options than employer plans. Early withdrawals surged 25% for emergencies, but Secure 2.0's expanded exceptions, like penalty-free withdrawals for birth or adoption, could make this more common. Future tax reforms could further reduce penalties or incentivize Roth conversions during rollovers. Schwab plans blockchain integration by 2027 for faster, secure transfers. Avoid indirect rollovers to prevent automatic 20% tax withholding. The 60-day rule requires you to redeposit funds into a qualified account to avoid penalties. Seek professional financial advice to navigate complex tax situations and avoid unexpected penalties. Consult a certified financial advisor or tax professional. Consider your long-term financial goals before withdrawing. Early withdrawals can disrupt retirement savings and incur penalties. Remember that compound interest works in your favor over time. Keeping funds invested allows earnings to grow exponentially. Utilize Schwab's tools and resources, including calculators and advisors, to help avoid common pitfalls in closing your 401k. In summary, closing a Charles Schwab 401k involves three main options, each with unique tax implications and long-term effects. Rollover allows tax-free transfer to an IRA or new 401k, preserving tax-deferred growth and avoiding penalties if done correctly. Withdrawal means cashing out, subject to income taxes, and a 10% early withdrawal penalty if you're under 59.5, though exceptions exist for qualifying events. Transfer moves assets directly to another custodian, often tax-free when handled custodian to custodian. For personalized guidance, contact Charles Schwab at 1-800-435-4000 or visit schwab.com for updated forms and information. Consult a financial advisor and stay informed about policy changes, such as those from the Secure 2.0 Act and IRS regulations. Make sure to stay up to date with policy and law changes.